Hello everyone, you're at the latest market news on May the 29th, 2020. U.S. plans response to new Hong Kong's legislation. U.S. President Donald Trump said to announce later on Friday his response to the Chinese parliament's advancement this week of security legislation for Hong Kong, which many lawyers, diplomats, and investors fear could disrupt the city's freedoms. Meanwhile, Hong Kong's government warned that withdrawal of the financial hub special status under U.S. law could backfire of the U.S. economy. The new Chinese legislation, likely to come into force before September, will tackle secession, subversion, terrorism, and foreign interference in the city. It could see Chinese intelligence agencies set up bases in Hong Kong. However, citizens see the security legislation as Beijing's latest attempt to tighten its control of the city. Many nations, including Australia, Britain, Canada, and the United States, have condemned the proposed security legislation, while Japan said it was seriously concerned. Hong Kong's Hang Seng Index, which has lost about 3% after the news of the security legislation, declined to 0.711% in the early afternoon. ECB aims to increase asset purchases next week. The European Central Bank plans to provide emergency asset purchases next week to maintain the economy, which fell in much deeper than originally anticipated recession. Analysts said the ECB's pandemic program will be increased on Thursday when the Governing Council holds its next scheduled meeting. The majority forecasts a top-up of €500 billion, $550 billion that would take purchases under all plans this year to €1.6 trillion. Meanwhile, economists expect European banks to borrow around €800 billion in the second quarter in the ECB's various lending programs. Probably this will happen through programs offering extremely favorable conditions in exchange for continued credit supply. Oil heads for biggest monthly rise in May. Oil prices decreased on Friday while are on track for their biggest monthly gains in years as production cuts and optimism about demand recovery in China supported prices. WTI is headed to rise 76% for May, its biggest monthly gain ever, while Brent surged 38%, marking the strongest monthly rise since March 1999. Meanwhile, during today's session, Brent crude futures dropped 43 cents or 1.2% to $34.86 a barrel, and U.S. West Texas Intermediate crude contracts tumbled 57 cents or 1.7% to $33.14 per barrel. Friday's fall was caused by data from the Energy Information Administration, which showed that U.S. crude oil and distillate inventories rose sharply last week, along with worsening U.S.-China tensions. Renault prepares plans restructuring in France. Renault, one of the biggest French car makers, announced on Friday it was launching talks with unions to restructure several car plants in the country, potentially leading to closures, as it confirmed plans to cut around 15,000 jobs worldwide. Faced with a slump in demand caused by coronavirus pandemic, Renault is aiming to find €2 billion, $2.22 billion in savings over the next 3 years through new restructuring measures. Furthermore, the company plans to trim its global production capacity to 3.3 million vehicles in 2024 from 4 million now, focusing on areas such as small vans or electric cars, as it frees in manufacturing expansion in other countries like Romania.